Welcome back. Well, quiet for the equity markets. So what's taking place in the metals market? Manisha Gupta, commodities editor, is standing by with her guest for today. Manisha.
Thank you so much for that, Ekta. Well, yes, I have with me Kishore Narne, who's head of commodities and currencies at Motilal Oswal. Kishore, hi, good to have you. And I want to start with the metals as a space where we have seen November as a stronger month. But in the recent couple of sessions or more, we've seen prices continue to come off as well. Well, yes, there's a lot to deal with. You have the US Fed meeting minutes coming up as well. But it majorly is how the US dollar also seems to be performing. That's weighing on. So starting with the overall sector first, and what would you want to watch out for moving forward from here?
Good morning, Manisha. I think, see, the commodity markets as a whole has come off from their peaks in the recent times. There are two major factors for that. One is the lower demand or dampening of demand from the China, which is going through its worst phase of COVID restrictions and lockdowns, etc. You've seen that actually most of the orders which have been there have been getting cancelled for December shipments and January shipments. Aluminum imports have been hurt. So I think overall that is dampening the sentiment. On the other side is the stronger dollar. So that's what actually making all the assets which are priced in dollars to be under pressure. So both of these things are expected to continue for a while. Though we're not bullish on most of the metals, but I think for absolute short term, if you're looking at next a week or so, probably we might have touched some kind of a floor and we would be able to bounce back. But the trajectory of the whole metals for the next 2 to 3 months will be downside itself.
All right. So another 2 to 3 weeks where you could be looking at lower metal prices. But as you mentioned, Kishore, there are a couple of pockets that you like within the sector. I want to ask you about copper first. And we've seen inventories continue to decline onto this one. But here as well, on-ground demand, as you said, is not picking up. What really works here?
See, I think when you speak to the industry guys, actually, currently this is the season where the next 2023 TCRC contracts are getting negotiated and all those things, and it's becoming extremely difficult for these contracts to be finalized at this point of time because of the volatility in the prices. But I think looking at next February or March 2023, I think the prices should be somewhere close to around 610, 620 kind of thing. So overall, the trajectory will be on the lower side. So inherently, in short term, if the pullback comes to around 680, 685 is on cards, especially 675, 680 is on possible. So I would like to hedge or sell at close to around 675 to 680 range on copper. On the other side, I think if you're looking at a positive sentiment within the metal basket, probably aluminum could be one of those metals. Whereas the tightening of sanctions on Russia, it might be becoming slightly more expensive. Second is the higher gas prices and electricity prices in the Europe actually is calling off a lot of smelting capacity there. So aluminum is one of the metal which could be slightly positive because of the rise in the input cost, which is typically the electricity cost.
Absolutely. And aluminum does consist of the cost of production that is very high when it comes to energy and electricity there. Kishore, also, how are you looking at nickel and zinc? Because both of these are in some way connected to steel. And that, of course, is because of China. Then how are these couple of metals looking?
I think, see, nickel, it's coming off from its lows, and even the volumes have started to improve on LME. So though Indian domestic volumes have not been very positive, but I think LME has seen slightly an uptick, and especially last month, there's been almost like 10-15% kind of rally from the bottom. So aluminum is not out of the woods, I can say, but it's a metal which in a longer term trajectory, it should be looked out for. As this is as we go ahead and the green initiatives are pushed into a lot of EV story plays out, nickel becomes extremely important in that trajectory, and this is one of the most beaten down sectors as well. But because the volumes are low, it's not a really tradable commodity at this point of time in India due to the lack of depth.
Right.
But I think globally, it's a metal which is need to be watched for to the middle of 2023. We should be able to get a significant momentum in nickel prices.
Okay. Kishore, how would you look at the zinc prices also? Because here as well, we've seen a huge amount of volatility come in. Last month was a great metal to trade in. This month, not so much. The last 1 week has seen a very sharp decline.
I think zinc is a primarily dependent on the construction and real estate market. So I think because the Chinese real estate market is going through a significant pain and the construction activity itself becomes a questionable at this point of time. Though Chinese are trying to boost it up and giving some support to that sector, but I think the galvanizing industry is going through pain, and I expect this pain to continue. Probably we are looking at 230 to 235 kind of levels on the downside. So probably in a medium term trajectory, it's still bearish.
All right, so that is the whole metal sector in a jiffy, where you are looking at some support coming in for aluminum, nickel perhaps in next year, but the other metals perhaps could see some more downtrend before we start lucrative levels come in for those. Kishore, thank you as always for joining us and giving us a sense on all of that sector. With that, that's all the time that we have on Halftime Report. After the break, Business Lunch will take all the action forward.